Hello, guys. Welcome. Greetings to you, whether it's morning in your side, evening, or night. You guys are welcome to this training session again. So we're going to continue with the phase 3 of our mentorship course line. We already talked about the institutional order flow. Remember I said this phase 3 is what is going to be like the heart of our training. So you need to make sure that you understand this particular stage very well before we really go on. Okay. If you don't understand this stage, it will be very difficult for you to move on. All right. So this is what I want us to talk about today. Phase 3 sub C, which is fair value gaps explained. All right, the BC and the CB. Okay, so now looking at this fair value gap and BC, this is something that's very crucial in the institutional order flow. Okay, institutional order flow. Now I want to bring your mind to this understanding that before a business can function, both buyers and sellers need to be present in the market. You understand? For example, put it that you yourself, you're having a business, all right? You are doing a business and then you don't have opposite participants. Let's say you are selling something. If you don't have people to buy, it's not actually going to function. You understand? So that is how Forex is, okay? There must be buyers and sellers present in the market for the market to be balanced. You understand? For the market to be balanced. Now, if the market is just always buying, there will be left. That means there will be no people to sell, right? There will be no people to sell. So this concept of BC and CB as an abbreviation comes in here to explain this particular scenario I'm trying to make you understand. All right. So the abbreviation for the full meaning of this BC is buy side imbalance, sell side inefficiency. Okay. And then for a CB is sell side imbalance, buy side inefficiency. You get it now. So these are just terms that are given to inefficiencies created in price because of lack of the opposite participant. All right. Suppose that we will see a market just push up rapidly, then now it means that the buyers at that point were too much more than the sellers, and because of that reason it causes an inefficiency, it causes an imbalance in the market. You understand? So for example, like I said here, the bulls buy price up rapidly. All right, the bulls here stands for buyers, stands for demand. Okay, so the demand pushes price up rapidly and there is less supply or less sales, which leaves an inefficiency. All right, and this inefficiency I mean here is a zone untraded where price will later come back to it to cover it up. All right, so such is referred to internal range liquidity. When prices run too far up and then you see price coming back down, prices coming back down to rebalance that particular area in the market, that particular zone in the market. All right, this particular topic is very, very important. It helps a lot in your institutional order flow. Okay, it helps a lot. I think it's very, very crucial, very, very important. You need to understand how the BC and the CB they function in price. Okay, because sometimes you think that price is going up while price is actually coming back down to rebalance either a BC or a CB in the both sides. You understand? So we're going to be looking at some examples of this BC and CB, and I'll be explaining more as we go ahead. So looking at this first image here, we have Euro USD from the 1 month time frame. Okay, this is Euro USD from the 1 month time frame. Now, if you look here, you will notice that inside this candle, only buy orders were present, which means that price went up rapidly. It created this imbalance. So let me quickly let me show you how an imbalance. Now, an imbalance, how to spot a BC or CB is when you see a candle forms like this. When a candle forms like this and closes up, remember I talked to you how to read candlesticks. This is the low, this is the open, and this is the close, and this is the high, right? So if this candle closes bullish like this is a bullish candle, and then the previous one opens here, because this opened, this closed here, so the next one has to open here. If we are in the bullish market, it will go up and then close up again. Now, if this candle opens and it trades down just a little, right? Just a little here, and then it goes back and closes up this way. Now, suppose that the previous one that closed at this level had a small wick up here like this, and then the wick down, the low of it right down. Let's say now we have maybe, since this one came and closed here, this there, let's say this is a bearish candle which opened up, came down and closed at this level. So this bullish candle opened and then went up. So this is a bearish candle here. It opens, a bearish candle opens up, trades down and closes. So this is the low of the bearish candle, but this now is a bullish candle that opens and went back up. So it's like this, the market went down and started going back up. Now, as the price is going back up, right, you notice this particular candle, this long candle, it formed and then it closes. So this candle, this is where it ended in the body of this candle. And then the previous one, the next candle opens and it doesn't trade right down to this level, right? It doesn't trade right down to this level. Like if it was like this, then it means that this particular area is balanced. Okay, price has balanced it. The fight between the buyers and sellers is balanced at this particular area. But now, if it doesn't come right down to balance the body of this candle, it closes here. This is what we call a Bisi. Okay, it's called a fair value gap. Fair value gap. You get it? So this particular region in this candle is called a fair value gap. Why? Because, or an imbalance, whatever you want to put it. This, at this point, it is supposed that only buy orders or only buying was present at this point. So we will be expecting price in the previous candles to open and then trade down back to this level before it goes back up. And that supports, that gives room for the movement of price, not in a straight line. All right, so price always goes up, it comes back down, balance some internal range liquidity. Remember I said all this is referred to internal range liquidity. So the market will go up, come back down and rebalance an internal range liquidity, and then it goes up, it creates some imbalances, it comes back to them, it goes up, it creates some imbalances, it comes back to them. All right, I hope you are trying to understand. So now look at this candle here. This is the monthly time frame. Now, when it created this level, you see what I was explaining. This candle did not come right down to the body of this, to the close of this area, even as right down to this level. Even this candle is an imbalance, right? But you focus on the nearest one since we are on an uptrend. Okay, so now undo. Okay, so this is a Bisi here. You can see I wrote here Bisi from the 1 month time frame. Now I wrote here my institutional order flow is bullish. Why? Because prices are pushing up. We are in an uptrend. All right, price is seeking for buy side liquidity. Here is buy side liquidity. So I will be expecting that price should come down to this inefficiency and go up. Remember, price doesn't move in a straight line. This is how price move. All right, so where I'm expecting a pullback to end is inside this inefficiency. I want price to come back inside this inefficiency and balance it before it moves up. Okay, so now let's see what happens. Price comes down to this level. We are supposed to buy from here and take our profit from this buy side liquidity. So, but how are we going to do it? You cannot trade on the monthly time frame because the range in pips will be too much, right? If you don't have a big account, you cannot trade on the monthly time frame. But the monthly time frame is good because it helps you know where price is going and where price is currently sitting, right? Because looking at this area, you would think that you are already in a downtrend on smaller time frames. Meanwhile, the Monday time frame is just seeking to balance this internal range liquidity. All right. So now this is it on the weekly time frame. This is the area on the weekly time frame, and this is the zone of the inefficiency. Okay, price left this zone on the inefficiency on the monthly time frame. So you see that the weekly came down right into it, and then it balanced it up. So remember, this is our target. If we are buying here, this is where we are heading to. We are heading to take liquidity above. We want to take our take profit above this area. So if we are buying here, this is where we are taking our profits. All right, so immediately you see price come down to this level on the weekly time frame, you just have to go to the 1 hour 15 minutes, and then you look for a break of structure. There is a topic on that break of structure, RTO, I'm going to teach you guys on that. All right, that will be our next topic: break of structure, how to identify break of structure. All right, so when price feels this, immediately you go down to smaller time frames to see price break a swing high, creates a higher high, and then it comes back down to either an order block or a fair value gap, and then you enter, you put their stop losses below, and now your take profit, you target it at this level. Okay, as simple as that. It's not something hard. Okay, so now when we see this, now let's go down again to smaller time frames. Now looking at this here, you notice that even the weekly time frame, when it tapped into this level, it pushed up randomly, right? It pushed up, and then it created another fair value gap here. You see how price came back, feel it, and then started going back up. So this is just to make you to understand that price will always be moving in a zigzag form, and the zigzag form is because it's rebalancing some internal range liquidity. All right, let's look at this example again. Now look at this. This is Euro USD. This is Euro USD, the daily time frame. Now price left this huge imbalance here. Now, what did I say? Price doesn't just move on a straight line. So we are expecting a pullback, right? As simple as that. Where are you expecting the pullback to come and end? So this is your range. This is where you want price to come into, and then you look for selling opportunity. Actually, we did take a sell on this on the 5-minute time frame around this area. It was a very good sniper entry. Immediately price took this level, we went down to smaller time frames, and then we saw a break of structure. Like I said, okay, price broke a structure and then came back to an order block of the 5-minute. I think the stop loss was really small. Okay, it was really a good trade. All right, so I don't know if I've uploaded that. I haven't done that. So let's just look at some examples again. Now, looking at this example, you will notice that price as well created an inefficiency here. Now, price tapped into a monthly CB, all right, which means that price pulled back down into a monthly CB. And when price feels a monthly CB, you have to be expecting prices to go up, right? Because on the monthly time frame, let's say on the monthly time frame, it will look like this: price went up, left at a BC, and then it's coming back down to field, and immediately it feels that too, we are expecting price to push up, right? So what are you going to be expecting now? Price has tapped into the BC of the monthly time frame, which means that our institutional order flow can be going up, right? But despite the fact that institutional order flow here was bearish because price was coming to the monthly BC, but you know that price doesn't move on a straight line, right? So price came on the daily time frame, it hit that monthly, and then you see this huge expansion up, and then it created this inefficiency. Look at this. You see the low of this candle, it didn't come right down to this level. So this is entry on the BCOB of the daily order block. Now, this is a daily order block, and two, this is an inefficiency that price has created. So we wait for price to come into it, and then we push prices up, right? So as simple as that, that's how you just spot it. You spot your order block, either you spot an imbalance, and so on. Okay, let's see if this did I have to, okay. Now, this is how it ended up. Price came back down. You see, it took the low of this doji, feel that inefficiency, and then you are buy to the upside. It happens. Okay, this is something very simple. Now let's look at this one here. Price. This is Euro USD. Now, institutional order flow is bearish. You always see this. If you want prices to go down, know why prices should be going down. All right. So let target is weekly consolidation low. All right. So one price to come right down. Okay, price has taken the buy side liquidity. Buy side liquidity taken. You see that price has taken this high, right? Price have taken this high. So what is price looking for now? Sell side liquidity, which is right down here, the low of this consolidation, right? Somebody asked a question: how do you know when price is going to consolidate? You will never really actually know what price is actually going to be doing, all right? But you have to just focus on higher time frames. Suppose that a candle can open today, and then like a daily candle, you would not know how much range is going to trade on that particular day, but the only time for you to discover is that you have to see price expanding. Like for this this expansion, this consolidation, when price came down to this level, I mean, many people thought that it's just going to continue going up, but you see that it came back down, right? And then if you could now be thinking that maybe it's just going to go up, and it will come back, it came back down again. So your problem is not to try to forecast a consolidation or whatsoever, but there is a particular topic that we are going to teach on this week. It's called market maker buy or sell model, right? And these consolidations there are in that topic. Okay, we are going to talk about it now. I said price took the buy side liquidity and is now looking for sell side liquidity. Now, when it took the sell side liquidity, it gave us it expand down, creating a CB right here. A CB is on a sell direction, right? And a Bisi is on a buy direction. When you want to sell, you are using a CB. When you are buying, you are using a Bisi, right? So price has already taken the buy side liquidity. So price is going to fill this and then it goes down, right, to the sell side inefficiency. Now, this is how the trade ended up. Price came back up to, let me see. Now, price came back into the BC. You see how it did sharply. It went down for the sell side liquidity, and immediately it took, you see, started rejecting and going back up. So it is very crucial that you understand when price is going to do this at this time and then at this time, right? It's very important. Now, look at this one here. Price came back to this inefficiency, rebalance it, and then went up. Okay, let's see some examples again. All right, let me go to Telegram. Okay, I hope you guys can see this now. Remember that in Forex, I said this and I'm saying it again. All right, price, the market books in on a liquidity. All right, the market will always book on liquidity, which means that you will always see the market. If the market is going up, it will always come back to internal range liquidity before it goes for external range liquidity. That's how the market moves, from internal range liquidity to external range liquidity. All right, that is how the market books, guys. That is how the market books, from internal range liquidity to external range liquidity. Okay, so you have I have some, let me see. Now let's look at this one. We have price left a CB on the 1 hour and went for the sell side liquidity of last week. Now, and after purging the liquidity, there was a sharp rejection back up, showing willingness to fill the 1 hour CB. Then a BC was spotted on M15 during London kill zone at 7 a.m. where price came back to fill, then continued the rally up to the CB. Now, looking at this, I said price came down. It took the weekly sell side liquidity. All right. Remember, price is always looking for liquidity. So after it took the sell side liquidity, we saw this huge candle, right? It created an inefficiency. This shows us that price is willing to go back up. And you'll notice that price also created a sell imbalance here, a CB here, right? Remember, I said CB is on a, now this is the H1 CB. So when it created this expansion, we knew that since price doesn't move on a straight line, it's coming back to rebalance this even before price could be going back down. So you wait for price, you see price created that, and then this candle, it opened and then came back down. You buy at this level, you put your stop losses here, and to that, that is a 1 to 3 risk reward ratio, right? Just very simple, no complications. Okay, so this is how it was spotted even on the 5-minute time frame. And if you would have seen this particular area on the 5 minutes, you'll be having better 1 to 5 risk reward ratio. That's the power of refining entries. We are going to do that. All right. Now, remember I said when you spot a CB, like what I was saying on the monthly chart for that Euro USD, that when you see price going down for a CB on a higher time frame, you go down to smaller time frames to look for break of structure, right? So this is the area that seek the sell side liquidity on the weekly time frame on Euro, and then this expansion happened on the 1 hour, right? So now for you looking for confirmation on the 1 hour, you can either be looking for break of structure. This is how this is. Price came up, went back down, went up, and then it broke the structure, right? So you enter here. Now, price went up again, create another BMS, and then came back down to the other block, right? You enter again. We remember the lesson with the other block we did. So if you could have entered even here, not even here, this is the entry, this is the first entry, and this is the second entry. This second entry is from this other block, right? You would have a 1-to-5 risk reward ratio, okay? And right up to the 1 hour order block right there. Okay, so let's check it again. Let's see, we'll see some examples. Now, looking at this area here, we have BC on the monthly time frame. What does this mean? It means that price is going to be coming down for this guy, right? Price is going to be coming down to peak this level. You see how price dropped drastically to balance the BC. This is how it was here, right? So monthly candle close as contraction candle and then leaving a BC below, right? So you'll be expecting price to come back down to it and then rebalance it. Okay, now look at this one again. This is another level here. Now at this point, this is the monthly BC. Our price have come down and filled the monthly BC. What did I say? You look for willingness. You see price shows you willingness that it wants to go up. Now the institutional order flow here was bullish, and you discover that price started going back up to seek for external range liquidity. And then upon doing that, you see this huge candle here. It created inefficiency, which is BC, and then you wait for price comes back to it, and boom, you buy it up. That was about 146 pips. Okay, you will buy to the sell buy side liquidity. Remember I said price leaves from internal range liquidity to external range liquidity. So when your internal range liquidity is balanced, then you look forward to your external range liquidity, which is this high, and all those things. Okay, so this is our entry here. Price went up, came back down, and then it took the liquidity. Right, there are a lots of this, see, price came down to this inefficiency here, hit it up, and then it went up. This was it here. Price, this candle closes, right? Looking at this area here. See the huge body of this candle. Price did not balance. Now, if you look before, you will see that here it was balanced. This week came up, this week came down. Everything was balanced, right? So price is looking for this liquidity here, right? We have already, this is the monthly order block. So price is from a monthly order block and it is going up, right? So it means that either this is how it was on the monthly time frame. This is our monthly order block. Price came to our monthly order block, hit our monthly order block. So what are we going to be expecting? Price to move upward prices. So this will be our external range liquidity, and price has come for the internal range liquidity. So whatever we are going to be doing here, we are going to just be looking to buy to that external range liquidity. And we notice price create an inefficiency here. So we are going to be expecting price to rebalance this and then we push prices up. Okay, and if that's the case, then okay, let me see. This is the level here. Price came back to it, filled it, and then it pushes up. All right. Now, yeah, this is the level here. This is it here. This is the picture. So price came back, rebalance it, and then you buy it. That's about 8,003 pips on the monthly time frame. Okay. So remember I said price is always looking for liquidity, always looking for liquidity. Now look at this one here, very interesting. Price came, price is going up, right? This is the order block from the monthly time frame. Price expanded up, created a fair value gap here. You see how price came back to it, it rebalanced, and then it pushed up. Very smart. Okay, let me see. Let's see if we can see more of this. Oh, that's picture isn't clear. So price came back to the monthly order block here, went down, came back to this BC, and then it's selling. We see that. So remember that price doesn't move on a straight line. And if price doesn't move on a straight line, price is always going to be rebalancing this internal range liquidity and then it sells off, right? So look at this area right up to the bottom of this candle. So what are you looking for here? a break of structure, looking for a break of structure, and you enter here, ask a confirmation. Okay, you don't just sell like that. If this is the weekly time frame, you're going to be going to smaller time frames to look for a break of structure, and then you sell. Remember, I said there's a lesson on structure, how to identify break of structure in line with institutional order flow. So we are going to talk about that. Now look at this area here. Price came down to a level, took the stop losses, and then it took the sell side liquidity, right? Sell side liquidity rated here, like I marked it. This is sell side liquidity has been rated. So price went up, came back to the order block here, and then it to expand up. It expanded up, created an inefficiency here, came back down, rebalance it, you enter again, and you target it. Your target was, this target was an internal CB on the weekly time frame. Okay, so this is something very, very important, guys. Very, very important. You will not hear a lot of people giving you so much value like this on this kind of topics, right? Look at this BC. What will happen here? Price will have to rebalance and then goes up, right? Simple as that. Looking at it from the weekly time frame, this is how it looks on the weekly time frame, but this is how it looks on the monthly time frame, right? So remember, I said when you have to start from a higher time frame, because actually the monthly time frame is going to be telling you that there is something here. There is a BC, but when you might look on smaller time frames and you don't actually see it, but know what, that the higher time frame takes the lead, all right? Higher time frames takes the lead, all right? Higher time frames take the lead. Never forget that. Higher time frames takes the lead. Okay, always stick with your higher time frames. They take the lead. Higher time frames takes the lead. Okay, so now looking at it on the daily time frame, you'll see that you might be confused that, okay, is price going to come down to which BC before going up? Now when price is heading for buy side liquidity, it doesn't reprice too much down. Like looking at this level here, price did not balance this, price did not balance this, but when it went up right up to this level, this is where the monthly candle closes, and then it opened this inefficiency, right? It opened this inefficiency. Now looking at this, remember I told you about this. This is a mitigation block, right? So we are having a mitigation a mitigation block inside a monthly BC, right? That's a powerful confirmation right there. So we are going to be waiting for price to come back to this mitigation block inside the monthly BC. All right, it's a very, very strong confirmation. You have your monthly BC, and inside that monthly BC, you have another POI, which is from the daily time frame. That's how you do refinement. We are going to talk on that. All right, we are going to talk on refinement. Let me clear this. All right, we are going to talk on refinement. Let me see. All right, this is how you see it on the weekly time frame. Price came back, rebalance. Now let's see. Okay, this is it. Price has tapped on the weekly, on the daily mitigation block, and then you see how rapidly it pushes up, right? It pushes up, clears the liquidity above. Okay, that's very, very. Now let's look at this one. Where's the draw on liquidity? Price is coming down for sell side liquidity. It has taken buy side liquidity, so the imbalance here, price will take it and then it drops down. Okay, I don't know. Yeah. Okay, you see how price came back up to it here at this level. Price rebalanced it, sold off. We had another order block here, sold off. This is a break of structure, sold off right down to this liquidity level here. All right, this is very interesting, guys. This is it here. Price even expanded right down, expanded rapidly. Okay, so looking at this area, now look at this area here. This is what? This is an imbalance, right? A buy side inefficiency. Remember I said price doesn't move on a straight line. It goes up, it comes back down, it rebalances. You take your entry and you go for the liquidity, for the next liquidity, all right? See that price created another inefficiency here. We're expecting upward prices. Price drops down. This is a breaker block. This is a breaker block on the H4, right? Remember I talked about breaker blocks. It clears liquidity down, it breaks structure, right? So this is GBP, GPY. Price came back to balance this inefficiency here, and then boom, it drops down, right? Price hits the breaker block on the 4-hour. This is an inefficiency on the daily time frame. So price is actually coming here to continue buying. You see it tapped it nicely and it went back up, right? As simple as that. So what is price is coming down for sell side liquidity. What happens is price has to rebalance this and then drops. Price doesn't move on a straight line from internal range liquidity to external range liquidity. Internal range liquidity to external range liquidity. You see how price rebalance it and then it drop down, right? So see how this level price is seeking for higher time frame, I mean, for buy side liquidity, it expanded up, comes back down, it rebalances, and then it pushes up, right? This is called a volume imbalance. This level is price skipped like this. It closes here, skipped and opens here, and then continues. This is a volume imbalance. Price comes back to it, fills, and then it goes up. This is another imbalance here. BC, price rebalance it, and then it goes up just like that, guys. These things, they happen, they happen, and they happen, they are happening again on the charts. All right, now look at this one here, very smart. This is an inefficiency here, right? So price has to rebalance this. You see how price hit the inefficiency right there, and then what happens? Look at this. This is another inefficiency here, right? Price has to target this one. So we are expecting price to buy up to this level, and what happens? Boom, price buys up to that level. Now, this is another inefficiency here. You're expecting price to move further down. Target is origin of consolidation. This is a consolidation. Then price went up. It hits the CB. This is now a CB. Remember, price has taken the buy side liquidity. So at this range, price will be now looking for the sell side liquidity. What happens? Boom, price drops down. It clears the sell side liquidity. I mean, these things, they happen, and they happen again, right? Now, this particular thing you are seeing, this particular chart you are seeing, this is how it looks like on the 1 month time frame. This inefficiency here was created, price came down, feel it. This is now a field, it shows us this willingness. You will look at from here. We already had an imbalance here, price came back to it, but this is another one here. We'll be expecting prices to buy from it. You see, price came back down, boom, it went up rapidly. All right. So weekly order block, price will be selling down. These things, they happen, and they happen all the time, guys. They happen, and they're happening again. This is how price is delivered. The market needs to be balanced. The market needs to be balanced. So whenever you see price create an inefficiency, know that around where you are expecting your retracement to end should be around internal range liquidity. Internal range liquidity can be a BC, CB, or other block, right? Mitigation block. Okay. So price is coming back down here to rebalance this and retest this high, and boom, that's it. You go there. Okay. So you'll see that at this level here, when you look at price like this is a weekly BC here, but this is the daily time frame. That's why you don't see it clearly. But this is the weekly BC. Remember, I said the higher time frames takes the lead, all right? The higher time frame takes the lead. Now, when you see this on the daily time frame, you would see that we have a BC here and a BC here. But when you are on the weekly time frame, you're going to see only one BC. That's why you have to start from higher time frames before you scroll down. Now, what does this mean? This means that price is likely coming down to fill this BC. And now, this is your order block, the last up candle. You wait, look for an entry there, and then price comes to it and it sells. So you see how price, when filling it, started going back bullish, right? So look at this again. Price created this order block, boom, it drops. This is an inefficiency that price created. Is looking for buy side liquidity, and boom, that's it. It fills there and then it moves rapidly up. Even going up, it gives you re-entries again. This is another inefficiency. It comes back to it, buys, comes back to it, and then it buys, right? So you have to know where price is going to, and if you know where price is going, it will be easy for you to identify the internal range liquidity so that price will pick them up and then it goes your direction. Okay. These things, they happen, and they are happening. They happen a lot on the charts. You see that level here? Look at this one, very clean. Price is coming for the buy side liquidity, right? So it gave us this expansion after coming into a weekly order block, right? A weekly order block gives a good buy reaction, right? Price came into a weekly order block, pushes back up, creates this inefficiency. What we are waiting for is price to rebalance it, and then it rebalances the internal range liquidity, and it goes for external range liquidity, as simple as that. This is a market maker buy model, right? Okay, this is it. Inefficiency, price goes back up, boom, it clears the internal range liquidity. Now the drawn liquidity has a monthly BC, so price we're looking to sell down to the monthly BC, right? And that happens, boom, smartly, right? Looking at this area here, what are we looking for? Price can go up there, come down to this level, and then it goes up, right? All these things, they happen and they happen, they're happening and they're happening again, guys. All right, it's not strange. It's not strange. These things are all happening. Okay. So that is it for this particular lesson, guys. That is it for this lesson. In our next class, that is it. Fair value gaps explained, BC and the CB. In our next class, which is phase 4, phase 4, we are going to be talking about how to identify market structure, how to identify break of structure, integrating it with order flow. And then you have your retained RATO and your other blocks. I'm already telling you this. Sorry about that even. So remember, you have to backtest, go back to the notes, watch a video like 5 to 10 times. It's very much important, right? The way I took mentorship from my mentor, you watch his video more than 20 times, right? Before you can even ask him a question, right? And if you watch a video for 20 times, you will not even have a question to ask again, right? Because everything is explained in details. I make sure I explain this in detail so that you understand, right? So if you can watch this video, watch and rewatch again, you will not even have a question, all right? You might have like a confusion in your mind, and that is what we are going to be expecting. So you have to do it, practice. I'm going to be giving an assignment for you to spot these BCs on the charts, 10 charts each person. So we are going to work on that. I don't know. Yeah, I'll just give the assignment here so that I will know those who are serious about it and those who are not really serious. Okay. I don't want unserious people around. So this is our assignment. I want charts like this. I want to see a chart like this. Let me give you a good example of what I want to see on the charts. Yeah, these are the kind of charts that I want to see. I want to see you mark an area where price comes back to balance either a BC or a CB, and then it went up to take a either buy side liquidity or sell side liquidity, right? 10 charts each person, all right? So I'll be expecting that before our next lesson, all right? So stay tuned, be safe, and have a good trading.